as a tool to increase interest rates faster than absolutely necessary. As far as everything else though, almost all items declined across the board from a month earlier, like food prices, cheaper, energy and gasoline, less money, used cars down 2.9%, airline fares, save 3% on your trip to getting a free stock down below in the description when you sign up for our sponsor, Public.com, using the code GRAHAM. Okay, jokes aside, besides housing, only a few items got more expensive throughout the last month, and that would be apparel, tobacco, vehicle maintenance, telephone services, laundry, and haircuts, which is a good sign that inflation is finally beginning to cool down. Except for tamale prices. Those are still up. So in terms of the most recent rate hike, as of a few hours ago, and what Jerome Powell said is most likely going to happen throughout these next few months, we should first talk about the implications throughout the stock and housing market, because there are a lot of changes that are beginning to go into effect. First, let's talk about the housing market. The mortgage giant Fannie Mae found that 62% of consumers believe that mortgage rates will continue to go higher while the Federal Reserve sticks to their plan of fighting inflation to the bitter end. And even though that might be true, thankfully, shelter costs are decreasing if you look at the latest data. In terms of the rent, it was found that multifamily prices dropped $9 a month nationally, which was the highest monthly drop in a decade. As they say, this was caused by economic headwinds and deteriorating demand, not to mention a lot more inventory. For instance, fewer people are renting because more people are moving back in with their parents. Occupancy is falling because prices have gotten too high. Not to mention, they have so much excess inventory that they're selling off entire subdivisions to institutional landlords who want to rent them out. Future construction is also slowing down now that multifamily building is at a 36-year high. All of that is to say that rental prices are beginning to decline throughout the United States, and if history is any indication, this will begin showing up on CPI numbers in the middle of next year as tenants begin to renew their leases at market rents, which will likely be a lot lower then than they are today. Second, let's talk about the stock market. It's no surprise that lower than expected inflation is enough to send the stock market into an end-of-the-year rally. But with the Federal Reserve now expected to continue their rate hikes throughout 2023, there's the mindset that the worst could still be yet to come. That's because the market is very much forward-thinking, meaning it doesn't matter so much what's happening today, but instead what the market expects to happen over the next 6 to 12 months. And if the Federal Reserve gives anything other than great news, the market begins to panic and sell off. Now, as far as what the experts believe is going to happen, Davis Research believes we'll see the S&P 500 at 4,300 at the end of 2023, Deutsche Bank and Oppenheimer believe that number to be 4,500, and a Reuters poll believes that to be 4,250. So basically no one has any idea what's going to happen, and the market often reacts to arbitrary numbers that could mean absolutely nothing. But in terms of the latest rate hikes and what Jerome Powell has to say, here's what you need to know, because a lot of this will have a direct impact on you. So as far as what just happened as of a few hours ago, the Federal Reserve started by reducing their rate hike to 50 basis points, exactly as the market expected. But the one piece of data the market didn't price in was the fact that the Federal Reserve expects to extend their rate hikes into 2023 without dropping them back down. See, in September, they projected a target federal funds rate of 4.6%, meaning we'd likely have 1 or 2 more rate hikes left, and then we're done. But now they've revised that upwards to 5.1%, suggesting that we've still got a long ways to go. And that inadvertently caused the stock market to fall while it readjusted to some new information. In addition to that, the Federal Reserve also reduced their anticipated GDP from 1.1% growth in 2023 down to 0.5%, basically hinting that we could continue to see an economic contraction over the next 12 months. However, in the sea of the stock market turning red, there is some good news in the fact that Jerome Powell admitted to being flexible and taking the approach of implementing smaller rate hikes throughout 2023 so as to feel out the economy and not overdo it. That way, we're not likely to have any abrupt 75 basis point rate hikes, and smaller rate increases will allow us to still fight inflation without losing everybody money. Ultimately, though, they're still just as committed to fighting inflation, and while the stock market was pricing in the chance of this soon coming to an end, it's looking as though 2023 is probably going to be a lot more of the same while they try to do their best to stamp out inflation as much as possible. And finally, in terms of our future rate hikes, as of right now, it's largely expected that the federal funds rate will peak around 5%, meaning our most likely outcome is another 25 to 50 basis point rate hike in February of 2023, one more in March, and then potentially make it be the pivotal moment that we've all been waiting for, where we either see a pause or even a decline for the first time in more than a year. Now, a lot could change between now and then, but by May, it should become apparent if we're seeing a meaningful decline in inflation, and if wages continue to drop, then there's absolutely the argument that they could begin to decrease interest rates in a way without spiking back up inflation. Of course, there's also the chance that they could just leave interest rates at 5% while they take a wait-and-see approach throughout our economy, at which case it's unclear just how much damage that will do versus slowly increasing interest rates over a longer period of time. But at the end of the day, the stock market does seem to be reacting positively to the information, and I'd love to get your thoughts on what you think is going to happen. If you believe that the market's already seen its worst, comment down below and let me know why, or if you think the market's about to see another drop, I'd also be interested in hearing your perspective. Honestly, the more opinions, the better, and no matter what, make sure to subscribe if you haven't done that already. So with that said, you guys, thank you so much for watching. As always, feel free to add me on Instagram, and don't forget our sponsor, Public.com, is giving you a free stock worth all the way up to $1,000 when you sign up using the link down below in the description with the code GRAHAM. Enjoy, thank you so much, and until next time.